Good day, everyone. It's a new day in the world's financial markets. Today is December 5, 2025, and this is part number one. Part number one, we discussed the general view of the markets, and we shed some light on where we think the markets are headed in the near term. As usual, we start with gold. Gold has now an average range of 64 points a day. That's an average move from high to low or vice versa based on the last 9 days. This comes in handy now because recently the market has been moving in a sideways fashion on an intraday basis as well as overall. You can see the sideways movement here since we peaked and dropped. Since the drop from the peak, we have been headed sideways. We try to rally only to drop, and then we try to drop only to rally again. Okay. So the intraday is no exception. The best way to do it is use about 80% of the average true range, 80% of the 64 points. That's the average range for the last 9 days. 80% of it should be used to basically exit long positions when the market rallies from the low. That 80% of the 64 points. Okay, so it's about 50 points. And vice versa. If the market were to drop 50 points and we're short, we will use that to cover the short 50 points from any high for the day. Okay, we'll cover that in the second part. Support starts at 4,022. That's the support channel. The best place to buy, though, is 3,900, close to the last low. Resistance starts at 42.27. That's the middle of this big down day, the middle of that channel from the 21st of October. When the market dropped in a big way, and resistance continues to the highs. We doubt any new highs for this year. Typically, the market moves sideways. It's only been 6 weeks. It moved sideways for 3 months. That's what history tells us. So we still have another 6 weeks to go of sideways movements on the market. That's what we have for gold. Let's move real quick here to the NASDAQ. Very bullish. No, for the near term, intermediate, and long term. I love how the market dropped into support, deep into the support channel, defended it, came out of it. This is very bullish. We're towards the end of the year. This has been a good year. Double-digit returns, almost 20% on the S&P and NASDAQ. It's about 18% to be exact. So this is going to be a good year, and we only have a few more weeks left. The market will be defended and most likely will stay bullish. We expect possibly a run towards the highs, and there's a possibility we make a new high. However, we will exit our long positions close to that high, which is 26,250. So close to that, we'll be exiting longs. We will not be shorting. We only buy equities till the end of the year. The best entry is this 24,860 on the NASDAQ. This is the 50-day exponential moving average. You can see here the S&P, which is very important as well. It's a very important index, is no exception. It's actually acting a little better on the way up than the NASDAQ. It's very, very close to its all-time high of 6,922. We're currently at 6,870, less than 50 points away. Less than 50, that's the 1%. The average range on the S&P is 77 points. So it's very close to the all-time high. NASDAQ has an average range of 460 points. Okay, so we'll keep that in mind here. Keep in mind, they're not sideways on the equities, they're more bullish. So we expect some good days ahead. We expect the range to expand possibly. Okay, unlike gold, we expect the range to stay tight and contracting like it has been. Okay, to stay within the range, that is. So that's what I have for now. We'll come back at 9 a.m. Eastern time and talk about the trades for today. Until that time, I wish everyone the best of luck and thank you.